Welcome to my Advanced Scalping course. In this video, we will explore different methods to pass evaluation accounts and build our funded account army. First, let's talk briefly about the mental side. In this course, we're also learning how to avoid tilting. You won't pass all evaluation accounts, and it's important to have realistic expectations so you can trade with less emotion. From what I know, around 20% of traders pass their prop firm challenges. So, if you have a 30 to 50% pass rate, that's really great. It might just be a day when a setup doesn't work, but it could work the next day. Let's start with order types and methods. I'll cover all the methods I know. I don't personally use all of them, but for the purpose of this video, I'll share all my knowledge. The first order type is the OCO order. One cancels other. Basically, you can place a long order above the current price and a short order below if you think we'll have some kind of range break to the upside or downside. When one of the orders is triggered, the other will be canceled. This order type is allowed by many prop firm evaluation accounts, but remember to check the rules of each firm. The second method is called long versus short. This style isn't traditional trading, and I highly suggest not using it unless you have funded accounts with real trading experience. Otherwise, you'll likely burn more money during your learning process. But this method is based purely on mathematics. It's similar to the OCO order, but you'll enter at the current price, and it needs to move in your favor before the trailing drawdown kicks in. This works well for evaluations that allow many contracts to be used and have a close to equal drawdown profit ratio. You can use the long versus short setup with the same prop firm, or if the firm doesn't allow it, you can go long with one prop firm and short with another. For example, you could take a long position with Apex Trader Funding and a short position with Bullinox. These methods are only useful if the prop firm has the conditions I mentioned above and allows a one-day pass. Now, the third method is trading with a setup. There are a couple of things we need to consider here. First, how much will the evaluation account cost? If the evaluation accounts are expensive or come with a consistency rule, it's generally better to trade using real setups. We'll pick a side and scale into the move with the proper setup. Okay, the first setup we'll take a look at is the red folder news setup. We want to try to pass our evaluations when there's big volatility coming into the market. High-impact news events create large price movements, which we can use to our advantage. So, how do we find these news events? We can go to Forex Factory's website and look for red folder news in advance. These events usually include major economic releases like non-farm payrolls, FOMC statements, CPI, and interest rate decisions, basically anything that shakes the market. Once we identify upcoming high-impact news, we can prepare for it and set up our trades accordingly. Now, let's look at this in a real environment. I have an account that has one day to pass, so we need to calculate what kind of order we need to make to pass it in one take. First, we need to calculate how many ticks we need overall. We divide the $3,000 needed to pass this account by $5, which is the amount each tick is worth in NASDAQ futures. This gives us 600 ticks. Next, we need to check how many contracts we have available. We have 5, so we divide the 600 ticks by 5 contracts, which results in 120 ticks per contract. To cover commissions, I will add 3 extra ticks, bringing the target to 123 ticks per contract. Now, I will place my OCO order with 5 contracts and set the profit target for each contract to 123 ticks. Then, we just wait and see what happens when the news is released. That worked perfectly. We passed our first evaluation account. The next setup we are looking at is a bounce short. Let's try to identify why we consider this a short. You can see this rejection above VWAP. It swept below and tried to bounce. What happened? It rejected hard. Look at these wicks. You can see we have a lower high. So what is this trying to tell us? Look at the last low where our OCO order was. We were betting that if we broke the lows, we would go lower. And we did. That passed our first evaluation account. The first thing I do is draw a 5-minute trend line so I have some kind of direction and a guideline when shorting. I don't want to see price holding above my trend line. That's my signal that I'm wrong and my exit. These are playback trades. I have live trades from these same setups where I do this, but for the purpose of this video, I have cleaned everything unnecessary from these charts. Let's see what it tells us next. Our best short entry would be at the previous support, which is the last lows. Why? Because if support has been broken, it turns into resistance. I'll make a separate video on support and resistance. We are riding with volatility and trying to pass these accounts, so let's wait and see what happens next. Okay, we have fallen really far from the last resistance line. It's starting to bounce now. I'm still hoping it will bounce to that resistance level. This is now in real-time speed, still going up. I'm watching for when it starts to resist the move to the upside. You can see it jumps down every time it tries to go up, so I'm thinking it won't reach the resistance level. Now, I've made a plan. I will try to scale in all the contracts to get the best possible average for my trade. We are still trading with a one-day pass account, and we have the same 123 tick order. But this time we will hammer all 5 contracts in separately and lean on volatility. Here's the key thing. Remember this if you don't remember anything else from this video. Pick a side and trade with it. Long or short, commit to it. If you're wrong, move on to the next one. If you blow this account, then you blow it. These are those cheap accounts with one day to pass. Now I've taken my starter position and committed to the downside. I have room to add all the way to the line if needed, but you can see that was almost the top of this bounce, so I will quickly hammer in the remaining 4 contracts into the winner and take my hands off the computer. What happens now is out of my hands. I'll either pass it or not. Sorry to remind you again, but we picked our side, and there's nothing more to do. We've accepted that we could blow this account. There's no tilt. Do it like a machine. It's working and I'm protecting it because I got my first fill. But if this is new to you, don't protect it. I know from experience that it should go down. And if it swipes up, I'll scale into the next bounce and try again. And that's it. Done. It worked well. Second account passed. Use the line as your guide. This is the setup I use with my funded accounts as well. But in this video, it was more of a momentum trade because of red folder news. When trading with funded accounts, you want to look for shorts more at resistance levels because most of the time, price will pull back from key levels. That's where your scalp trade is. Okay, on to the next setup then. Thumbs up and subscribe to the channel.